We're going to have a great webinar today, and I certainly do appreciate being here with my friends from Caseware, because when we get to the end of this presentation, I think everyone will understand why I call them my friends. All right, as we move through this webinar, there's a few things that we need to touch on to set the stage for how Georgia Tech has moved from a manual assessment process of various systems to a continuous controls monitoring implementation. We, as a profession, and I'm speaking to the internal auditors here, have passed the point where you can manually check things and provide reasonable assurance to organizations if you have any type of large spend. So we're going to talk about data analytics. We're going to talk about fraud prevention, which is enabled in a way that has just previously been unthought of. And then we're going to talk about how all of those things led Georgia Tech to implement a continuous monitoring package. And of course, we'll give some time to answer questions, or to ask questions and to answer them. So let's move right on in. When we're talking about the internet, the modern era, so to speak, what are the risks out there? Well, for this particular presentation, I want to talk about credit cards and purchasing cards and the information age risks around those. Now, for those of you who are in the association, you may have heard me speak about this before, and I certainly will touch on some of the things you heard. But in this, I'm going to speak about it a lot differently. Not so much in how fraud is committed on credit cards or credit cards are used to commit fraud, but rather what we as an institution had to do and have to do to make things better and to provide reasonable assurance of assessment and controls. At Georgia Tech, we had several large-scale incidents. And actually, those incidents, once they were identified, we were able to say, why they stalled. What was even harder to find was the proverbial needle in the haystack for smaller frauds. And I'm talking about those frauds that were at $1,000 or a couple of $1,000. Extraordinarily difficult. And I'll tell you how we made those discoveries a little later. Let me talk about purchasing cards and fraud for a minute. There are numerous ways to use purchasing card to steal, or to steal from someone who has a purchasing card. In the late 90s, when credit cards came to the entire state of Georgia procurement system, it was a very manual process. And it worked something like this. The Bank of America, which was our issuing bank for our credit cards, would send a series of paper-based statements to the institution, which were then distributed out to the cardholders. The way that they did that, they said, okay, these cardholders have these purchases. And most of us have looked at it. Most of us have looked at a credit card statement before, and we understood you're going to get the posting date, the transaction date, some long number that the credit card company uses to reference it, a vendor name, and an amount. And that was pretty much what you had to go on. So the control systems were built around being able to have a cardholder provide a receipt. And with that receipt, generally most of us had some type of log that said, this is the business purpose of it. Well, that's actually quite easy to steal. And we discovered that here at Georgia Tech about 2006 and 2007, when we discovered that there were a lot of people who had used desktop publishing software to create their own receipts. Well, that led to a series of problematic situations, not only within Georgia Tech, but within our entire state government. And essentially, it went something like this. The state auditors did an audit, a performance audit of the entire state government and said, you know, how are these purchasing cards working 6 years after their implementation? What they found was that in every state agency, there was widespread fraud. And institutions of higher education where trust and reliance on individuals' integrity was a little bit higher than it was in a commercial environment, found that that fraud was even more widespread. So the question was put forth, how do we assess this? Because in addition to the fraud, what they also found, what the state auditors also found, was that the compliance with the state policies in terms of procurement, use of state contracts, all of that was all over the board. And so we weren't maximizing the value of our spend. We were not able to control the economic crime that was going on, and we were certainly not able to prevent fraud when receipt mechanisms where individuals expected to give us receipts was the primary way in which we were identifying problematic situations. Who else deals with your credit cards at your institution? Well, now, most of us say, well, I have my credit card. Well, that's true, but your banking partner always has that credit card. Your merchant provider always has that credit card number. Your IT and your business staff who are securing your database, especially if you're using a third-party processor and you're transmitting information to TouchNet or to some other type of processor, they're going to have it. Most of us who have sports teams on campus, your ticketing companies are going to have it, and of course the credit card companies have it. So there's a lot of people out there who have these credit card numbers. So what do we look at as controls when we're doing it in the modern era? With all of these numbers out there, with all these purchases going on, I have to explain it in the way that we do it at Georgia Tech. Next slide, please. The process that we deal with here is a front-end one. A need is identified. Now, that's fairly simple. Professors doing research, you need something, go out and get it. Administratively, we need pens, pencils, paper, computers, so forth, so on. The needs identified. Cardholder, in other words, the person that you've extended the trust relationship to procure goods and services using the vehicle of a credit card, goes out and makes the purchase. Sometimes within Georgia Tech, depending on how much spend, there is a local purchase process, but most of the time the cardholder goes out and makes the process. Bank of America provides that information electronically. Now keep in mind, early in the presentation, I talked about the way the controls were around the year 2000, paper-based manual process. Well, now, as everything has moved in just the 13 years that have passed, everything's electronic now. The paper-based statement is an antiquated technique. What really happens now is you have an online system that is hooked into a general ledger. In the case of Georgia Tech, we use PeopleSoft. So what happens is when you have a chart of accounts with all these different accounts to redistribute to, you want that to happen so you don't have to go into your general ledger and start making journal entries every time. What Bank of America and most other large issuing banks allow you to do is have some type of system, in our case we call it Hurd, that allows you to go in within a week to 2 weeks and change the account that it will hit in the general ledger. Okay, so that's what happens. Well, then the cardholder prepares a receipt and a statement. Now, in our case, that's electronically transmitted, or if you want a paper-based one, we can still get it. But the receipts are then held by the cardholder. Now, so at this point, I want to make a comment as we talk about continuous controls and how we got there. In 2000, you had the very manual process. 2006, we're identifying the fraud. But we're also seeing that you have a 2-month window to report fraud. In other words, and this is something very important about procurement cards, if you don't report that fraud to your issuing bank within 60 days of the fraudulent purchase, they assume zero liability. So also, although most issuing banks will sell an institution on the idea that you have $100,000 insurance per cardholder, so to speak, what they really mean is whatever you reported up to the cardholder's approved spend level in a period of 60 days. Now, if you follow along, a reconciliation process based on a statement comes along at roughly 30 days. And I'm sure, unlike every one of you who rushes to pay your bill the minute you get it, most folks at Georgia Tech realize that it's not due until about 30 days later. So we put it appropriately prioritized in our stack of things to do, and I'm sure other institutions have plenty of staff to do things with, but here at Georgia Tech we're stretched a little bit. So generally speaking, by the time our reconciliation and reporting process is coming around, we're up around 60 days, 45 to 60 days. The problem with that is that if you don't notice the fraud immediately, well, you're going to become liable. We found this to be true because when we found several large frauds, and we did report them to the banks, they informed us of this process. And they informed us they weren't liable for the hundreds of thousands of dollars in losses that had taken place over the course of about 5 years. Well, if you look at what the Association of Certified Fraud Examiners puts out about economic crime and fraud, the average fraud takes place and is not detected for a period of 18 to 24 months. In other words, 1.5 to 2 years. So take a look at that and ask yourselves, okay, well, if that were taking place on a procurement card, how long would I actually be in the process for? Well, I'll let you think on that for just a minute. So go over to the P-card approver and review process. What happens is after the cardholder reconciles this account, they've got this ton of receipts, they put it together with a statement, they hand it off to another person who is a coordinator or an approver who has some kind of oversight knowledge, the second signature, so to speak. What we found here is if you're a research institution, the first person who is the cardholder is usually an administrator, and they're usually working for a PhD or professor who is ordering things that nobody's ever heard of before. For example, an Olici. Do you know what that is? I don't either, but it comes across our P-card statements quite often. I had to track that down one time, and I found out that it was a process of which scientists can get material to look at the molecular level. Now think about that. If you're purchasing for 8 or 10 professors, and they're coming in with these scientific terms, I mean, they know what they're buying. They're telling you to buy it. You're the purchasing card holder. You're going out and buying it. Well, what do you think one level back from you, an administrator who's back? Are they going to know what that is? No, not really. So what's going to happen? Well, that process of verification starts to break down. You don't know what it is that they're looking at. So you have a tendency to say, I don't know what this is. It sounds scientific, so yeah, I'm going to say okay. And then, of course, the last part of the process is redistribution or journal entry if it wasn't done within the automated Bank of America system before. The problem with those card-based controls is that they reflect the industry's projection that they're trying to keep fraud to a manageable level. So let me give you this scenario. the state of Georgia, you're not allowed to purchase fuel on a purchasing card. And we turn a lot of merchant category codes off that reflect fuel. However, when we do our reconciliations, quite often we still find fuel. Why is that? Well, you have to think about this in the logic of a computer. Now, if you pull into a racetrack or a Quick Trip or a Quickie Mart and you get gas, in a human's mind, you perceive that you're at a gas station and you're just going to go in and you're going to buy your soda and your chips and whatever. Well, a computer doesn't see it that way. They see it strictly in terms of the card reader. So if you pull up at a gas station and you put your card in at the pump, well, the merchant category code reflects gas station. However, if you walk into that store, well, that's not a gas station to the computer system. That's a retail merchant selling sundries. Well, if you haven't put both those merchant category codes on your restricted list so that the transaction that is beyond the parameters is rejected, you can make it. Another scenario would be, okay, well, you don't allow travel, so you don't have a hotel. Well, hotels have gift shops. They have restaurants. They have all sorts of other things in them. And again, the computer's seeing it by the terminal where the card is actually swiped or processed. And some very creative merchants have started running through the card through different merchant category codes to find one that works. Now, on the flip side, you've got what most institutions consider procedural controls, or controls, which is policies and procedures, and they're great. You got to have them. Training, they're great. You got to have it. And then you have the cardholder agreement. That's great. You got to have it. If you're going to hold anybody accountable, you got to have all those things. Herein lies the problem. I have read hundreds of policies and procedures surrounding purchasing cards and institutions. I've been to literally about 3 dozen different types of training classes on credit cards for purchasing and procurement vehicles. And I have read dozens of cardholder agreements. They all boil down to what I'm going to paraphrase to you here now. The cardholder agreements roughly say, I promise not to lie, cheat, or steal with this procurement card and to use it for my institution's business. The training reflects that, and the policies and procedures say that. And that's fine. However, the inherent flaw in that is if you are a fraudster and you're intending to deceive your institution and you're intending to steal hundreds of thousands of dollars, which is a felony, and you're going to potentially face racketeering charges, felony embezzlement charges, you name it, do you really think signing the cardholder agreement is going to stop that? I'll let you think about that. You can formulate your own answer. But in my case, my perspective opinion is no, it's not. And that comes from the personal experience of dealing with these people who had all signed the cardholder agreement. And many of them had gone through training. And every one of them knew the policies and procedures. We made them swear to it in the cardholder agreement.